You either have to be extremely autistic and your prediction has to be right this time, or you're going to round trip everything because your target isn't hit.
We as a species have always played stupid games to win stupid prizes. And the prizes in the competition of social status, they are the same as they have been a couple of decades or even a couple of centuries ago. However, the games we are playing have become so much more stupid. It all feels so utterly retarded.
Bitcoin will barely hit 200K. We're going to get close to 200K.
Altcoin, besides Bitcoin, is the second crypto investment I would start explaining to any friend that asks me if he or she should get into crypto. Altcoin is the best resemblance of the reflexivity of this market.
The best time to play the cycle was last year. The second best is now, because we had a decent dip to top blast, or to sell the top, or to round trip everything minus 90%. Hey Max, how's it going?
Going pretty well. How about you?
Pretty good. We've been chatting about how to time the market, the exact thing every trader should always try to do. Not. What are your thoughts about it?
I guess now with everything heating up again, it's time to get back into the cycle top predictions. We've had this conversation in private quite a few times. I'm personally not a huge fan of the 48-month or 4-year cycle theory because there is no underlying cause why it should hold, especially with the asset class maturing and becoming more institutionalized. However, I fully acknowledge that it would be quite unwise to actively bet against this theory as long as there is no clear indication that it does not any longer hold true. And for now, it has held true every single time. So yes, I would use it as an factor to orient yourself along, but I would feel very uncomfortable solely relying on it. How about you?
So I mainly agree with you, but I think a lot of the information is implicit in the 4-year cycle. If you just think about this year, we had a massive lead up with Trump, with his own meme coin, with meme coins in general, with the legitimization of crypto, with Bitcoin being more and more accepted by institutionals. There have been milestones that to some extent we take for granted. In my mind, the 4-year cycle is just crypto's own way of celebrating summer, or late summer, late capitalism and late summer, basically. And there's all these like indicators which we can touch on in a second if that's helpful. But like you said, everything that's worked in the past is likely going to work until proven wrong. So I don't think it's proven wrong yet, but I think I would also bet on the 4-year cycle breaking at some point.
Yeah, we have quite a bit of alignment there. In our past conversations, you have been of the opinion that we are going to top a little earlier than we did in 2017-18 and in 2021. I wasn't around in 17-18, but if I remember correctly, the peak was around December and January, so around New Year of 2018. And in 2021, which was my first cycle, we peaked in early November with BTC and some of the other alts, especially the latest stage, I think, were gaming coins. These peaked in early December. And your prediction for this cycle is that we are going to peak in July, August, if I remember correctly.
Yeah.
Come to that conclusion.
It's a combination of things. So first of all, I don't see the prediction as a static. I think what's much more important is to look at the actual data as we approach those months and reassess the judgment. I'm happy to be wrong. Like if we are in July, August, and a few of the metrics I take into account are lagging or are not as highly euphoric as I would have expected them, I would revert my opinion and say maybe we didn't peak yet. I started this space through mining. I was proof of work mining with GPUs, with FPGAs, with ASICs, and we planned our OPEX and CAPEX based on the halving and based on the cycle. And there's this 46 to 48 month, which you've described, historical peak post halving. And we're just approaching that in July, August. So that's the simplest theory. I also have seen that if you look at the especially Bitcoin moves cycle by cycle, you see a compression. You see that it doesn't reach proportionally the same heights and the same multiples it has reached in previous cycles. With that in mind, when everyone expects something to happen in December, I would basically bet on front running that by 2-3 months. And I feel like that's been the main consensus. Like the sentiment has been, oh, late 2025, early 2026, we're gonna peak. Um, Again, not trying to actually time the market. I think the smart thing to do is just to like DCA out with a sensible strategy. And should there be a massive dip, that's an opportunity to buy some back. But in general, I think there's a compression every cycle. And then the last thing is kind of speaking to your point. Last cycle we had COVID and we had crazy QE policies with money printer go basically. We don't have that this cycle. To your point, we don't have the mega catalyst like we had in 2020. So taking all those three things into account, on the counter side, we have Trump, we have Doge, we have the legitimization of crypto in general. I think we will have a cycle. I think it'll peak in July, August.
Mm. Yeah, I think the catalyst question is quite an important one because if you look at the current macro landscape, there's a mood of big indifference right now. Even in the bear market in 22, 23, if you looked at the developments of a yield curve, the raising interest rates, and all of these various indicators, I think in the macro scene, you had much more directionally strong takes on how things would develop over the next, let's say, 3 to 24 months. And right now, there's no coherent macro outlook. There seems to be a very big cloud of uncertainty above everything. You have the Fed pivot until you typically see the recession. There's like an average delay. Same with the yield curve inversion. But all of these things didn't really hold true this time, at least until now. There's a Arthur Hayes essay. I think he published it around a year ago in 2024, where his claim was that it was before the US election, obviously. And regardless of which candidate would win, it is very likely that we are not going to see another recession because both candidates will result in higher government spending. And the overall percentage share of government spending of total GDP has grown to such an extent, I think it is around 1/3 of the GDP in many first world nations, that given that recessions are usually triggered by an economic degrowth of 0.2, 0.3, 0.4%, it is very easy to just counteract that with more irresponsible government spending. So I think that is another factor that kind of clouds the sentiment, because if there is urgency to prevent a recession and if there's the political will to prevent one, I do think it is very well possible to do that. Of course, at some point in time, this entire courthouse will collapse. But as we have seen, essentially since the global financial crisis of 08, 09, we cannot predict when this courthouse is going to collapse. And everybody who has been aggressively short the market ever since 2009 has lost out very bigly, except for very short periods of time, for example, during COVID. And regardless whether you look at macro or whether you look at crypto internally, I personally cannot identify a single catalyst that makes me think, okay, we are going to be catapulted to new all-time highs, excess in altcoins, excess in some low-cap shitters, or what would definitely bring us up in BTC up to 200K within the next couple of months. I mean, the remaining catalysts were the FTX payouts. That was a couple of billion of dollars, but that has happened pretty much in silence. I've received my money back. I think some other people are also in the queue now, or 2 weeks ago, there was another payout. None of that really had a significant impact on the market. maybe it contributed a little bit to the run-up of the last few weeks, but it was not talked about much. There's no attention. Also, there's no regulatory catalyst in place right now. The stuff that is going to get regulated most likely is stablecoins and market structure. Stablecoins are not exciting at all for retail unless you have a sort of Ponzi scheme like a Anchor protocol in 2022.
I agree.
Structure takes months, if not years, to have any actual impact on how prices behave. So yeah, regardless in which direction you're looking right now, I cannot see a catalyst on the horizon that says, okay, in the summer months, we are going to see an absolute mania.
I think we're very aligned, even though our perspectives are just slightly different. I agree with you, there's no mega catalyst. Period. I still think that all of these smaller nation states following the states, either through seizing illegally accumulated funds or other means accumulating some sort of like crypto Bitcoin reserve. I mean, we have El Salvador, we have a couple other countries, I think is a pretty big deal. It's just not this mega catalyst. I would say this cycle is the accumulation of smaller catalysts. On the regulation side, what I see is that because of these tactics this Trump administration is pursuing, I feel like just lifting what they've been doing previously is going to feel like a relief and catalyst, referring to tariffs, right? There's this FUD and fear around tariffs, and now they're threatening the EU with 50% tariffs. They had a call apparently a couple days ago to postpone that. I feel just lifting that threat is going to lead to like a very positive market sentiment. So I do agree with you. I don't see inherent like very tangible mega catalyst. I do see the accumulation of smaller catalysts. On the Arthur Hayes thesis, I also think that's very true. I pretty much agree with that. And on top of there not being a massive liquidity injection, I mean, every cycle it gets more and more cluttered with random bullshit, with random token, with random memes. We have a crazy overproduction of token, and it's extremely unclear at first what to even buy. There's two things. I think there's the institutional cycle and there's the retail cycle. And I would argue that there's consensus that the institutional cycle is going to be BTC and BTC only, and they're not going to rotate into any shitters. Period. That's it. And the retail cycle is going to be probably something along the lines of meme coins or very, very few altcoins such as Hyperliquid. I don't really see any major asset other than meme coins being able to attract the interest of retail. Meme coins are more fun. Meme coins are like they're so stupid, and at least you can control a little bit more where you're getting gamed, right? So buying an asset at 3-4 million, 10 million market cap may not be the smartest thing to do, but you can follow the history on chain, you can check the bundles, you can check the snipes, you can check the holding distribution, you can do all that. If you buy a VC-backed project's asset at 1.7 billion market cap on Binance, you cannot do any of that. And you're probably getting dumped on by insiders, VCs, and so on. So we spoke about that. I think everyone agrees on that. And I think because of that, it's going to be funnier to buy Fartcoin or whatnot. At the same time, I think the multiples are, as always, exaggerated. You don't expect any 100, 200x's. Bitcoin, I think, will barely hit 200K. We're going to get close to 200K, though. Like, my prediction would be either we're going to be just short of 200K, something like 189K, 193K, and then that's it. Or we're going to shoot over quite a bit to 250K, and then that's it. I don't expect 3, 4, 5 or anything like that. Bitcoin will go to 1 million, just not this cycle.
No, I largely agree there, especially with the differentiation between the institutional and retail cycle. I think overall it's a positive development that BTC is decoupling a bit from the rest of the industry in terms of perception, but also price-wise. The narrative of BTC as a system hedge against the financial system, as a geopolitical hedge, it doesn't have anything to do with either memes or even DeFi coins. And the underlying drivers of inflows and outflows for BTC should, if the market was efficient, be fundamentally different. So on the institutional side, you'll see a focus on BTC, maybe a little bit of ETH, Solana, both on the kind of TradFi financial products provider side who market it to financial advisors and to retail who want to get exposure via TradFi verticals, but also for some more flexible TradFi family offices or hedge funds, which have more openness to taking directional bets on these assets on their own. Maybe Hyperliquid will get a little bit of attention, even though I think the on-chain nativeness of Hyperliquid is going to scare away quite a few of these funds. The rest, maybe XRP, because they have a decent BD on the TradFi side. Maybe stuff like HBAR, Algorand will receive a little bit of attention. But again, first of all, these things have been around for ages. They're not going to create the same retail sentiment and hype as they did in the 2017, 2018, or the 2021 cycle. Also, they are sitting at a much higher market cap right now. A lot more tokens are circulating than when these things first launched. So it is going to be much harder to sustainably pump up the price, not necessarily because liquidity is so huge, but you have a lot of backholders in these tokens. You have a lot of people who want to unload. And as soon as they're break even or up a decent percentage from their entry price a couple of years ago, they'll have, they'll impose a quite sustained selling pressure on these tokens. Then on the DeFi side, the most interesting ones for me are Hyperliquid, Pendle, Ethena, and Fluid. However, especially Pendle, Ethena, and Fluid are only known within people who are in the crypto industry already. So it's very...
I would not go that deep, to be honest with you. I see your point of outlining specifics, but honestly, like, I think keeping it to, hey, there's going to be meme coins for retail, and there's probably going to be very few altcoins along the lines of hype will do it. And the reason I say this is I know how these things are being managed behind the scenes. And think of it this way. You know, everyone understands these opportunistic launches and token unlocks and how things are being played. And even if cliff investings are in place, there are certain triggers such as price, which just unlocks tokens. So you may see some of these as an interesting technological concept or having an interesting utility. All of the assets you just mentioned, and probably including hype, will go down 90% plus when the crash happens. So I think at this point, I wouldn't touch any of that for more than like a couple weeks. So that's why I would just suggest not going too deep on specific assets, but just describing the dynamics. And I'll give you the craziest examples I came across. It's basically the kickback, right? So you have you negotiate a deal with an investor and you say, okay, cool. They're coming in and they're like, hey, how can I make 50, 100 million in crypto? And they find a good team, seems to be underpriced. Token is trading at 10 cents. The pre-sale was whatever, 8 cents. And they're like, hey, can I buy your token at 4 cents? And how do we do that? I'm going to inject 5 million, 10 million, whatever, in spot into the markets. And you're just going to give me a kickback such that I get my purchase price of 4 cents. And if the token price hits 85 cents or whatever, my tokens unlock, right? So that happens all the time. And that's why I would be very, very careful, honestly, buying anything on a centralized exchange that has billions or hundreds of millions of dollar valuations. On the flip side,
is that behavior isolated to centralized exchanges? I would assume that in the meme coin space, what we've seen with Libra, Melania, etc., these were not centralized exchange-driven tokens. They got listed pretty quickly, but I would assume that these deals would have happened independent from that.
So in the meme coin space, if that happens, the next day there will be an article about it. And either Zach, XBT, or Bubble Maps, or one of these forensic firms will talk about it.
Yeah,
it's
but who
much,
cares?
much harder.
I mean, they can't recoup the money. Hayden
no, that's not the point.
Walked away with 100 million.
That's not the point. That's exactly what I'm saying. Don't go into any fake narrative, any hype, any new thing in the first place. If you're gonna buy something established, hold it for a few weeks. If you're lucky, there's still gas in the tank for another 4 to 10x or something like that. and the last leg of the cycle, and that's it. I would never ever buy into something crazy hyped that hasn't been around for enough. I mean, this is what everyone, all the like meme coin messiahs are saying as well. But I'm just saying that in non-meme coins, that happens behind the scenes. In meme coins, at least you can do some analysis on chain.
I agree, but on the other hand, on the meme coin side, you also have more dilution. Back in the days with Dogecoin and maybe Pepe or Shiba Inu, which ran quite a bit 4 years ago, there were a handful of memes that were around and where people actually build what resembled a community around them. By now, you already have a couple of dozen, and creating tokens has become so easy, which is utilized on the meme coin front, less so on the like technical coin, DeFi coin front. Which of these are going to run? Because initially, retail is not going to punt their paycheck on a $4 million market cap meme coin because they are not on deck screener 5 hours a day, and they will not find these things that early. They'll find them when they are at 100 million, 200 million, etc. Most of
I disagree.
coins are already losing all their steam once they hit a couple of million because the sophisticated players who get in early enough, they know the game well enough by now that they just want to securely extract a couple of X's at the very beginning, and they don't care how far these things run.
I mean, this isn't a sane investment strategy. We are talking about house money or gamble with asymmetric upside.
Of
But I
course,
disagree on
in
the point
order to
that
get retail interested in this entire market again, there needs to be the hope of I'll buy this thing and it's going to hit 100x, a 200x, a 300x. If you look back at 2021, I think I entered crypto in January 2021, and from April, May onwards, I saw a lot of people, mostly who I knew from online, like Discord servers, etc. They were flocking into these crypto trading Discords. Some people in random WhatsApp groups that had nothing to do with crypto prior were like sharing screenshots of like some distant relative of them making $1 million with some meme coin that launched on Binance Smart Chain the day earlier. These were the stories that lured people in. Right now, the entire narrative about crypto is that it is max extract, and the sort of more sustainable, institutionalized narratives like BTC, ETH, and Sol, they do not offer the appeal of 100x or 200x. So, in order to get people interested in punting on meme coins again, there need to be these mysterious success stories of people who had no idea about crypto prior, who made 100K or a million overnight.
the irony, so just to finish maybe the previous point, I think mainstream can access these very early these days with apps like Moonshot and Phantom in the App Store. And I think even though they will not get in at 50K market cap, they're easily getting at 1, 2 million market cap, 3 million market cap before the thing starts running. On the other point of max extract and there hasn't been the sentiment, the funny thing is this applies to, I think, every area in life. The moment those stories come up, it's too late. You have to be around as those stories are in the making and are being cooked for you to increase your chances to be part of this story. And I think
100%. But these people who enter once these stories are spinning the webs, these people are the exit liquidity. And these people are a necessary condition to create the last leg of the parabola, which is very short lasting, but in which you have the highest amount of percentage gains.
exactly, I agree with you. I agree with you. That's why I don't think it's a good thing. Like you shouldn't be lured into the space through these stories. Like ideally, the best time to play the cycle was probably last year. The second best is probably now because we had a decent dip. An old generation of memes is slowing down and dying. A new generation of memes is coming up. We all know that the new runner always runs harder than the old OG runner, even though like it's supposed to be the OG thing. That's not how things work. The new runner always goes harder. And that's why I think now is a better time than when the stories that you described come out. I think when the stories you've described come out, it's probably max danger zone.
Of course, but again, like I'm not arguing from our perspective of us as investors. However, for us to achieve price-wise the hypothetical X of some tokens, and for us to have the opportunity to exit and dump on retail, you need these stories to make the rounds in order to get people excited and buy the Pico top. Because otherwise, if it stays a very industry internal game of the same 5 to, let's say, 20,000 market participants that we actively have in crypto right now, everybody knows the game. Some know it better, some know it worse, but everybody has a very short-termist extractive mindset. And all 20,000 of us are desperately waiting for a million new retailers to withdraw some ETH or SOL this cycle, probably SOL is more likely, from their Coinbase or Binance app and start buying the Pico top of some stupid meme coins, which we've been holding from right now or a few months ago, and which we are desperately waiting to exit. But we need to create a narrative, or somebody else needs to create a narrative that lures these people back into the space.
I mean, that's
Otherwise,
you're
we
just
will not
describing
see,
attention.
yes, but we will otherwise we will not see the crazy euphoria that we have seen in 2021. And if that doesn't happen, this bull market will be much more muted and will probably be dominated by the more institutional plays.
Okay, I have a counter question then. How did Fartcoin happen?
Fartcoin was of the very few bets that received a lot of crypto internal attention because it did a very good job at walking the fine line between being funny but not being so overly grotesque or vulgar that it scares away a ton of people. Because Fartcoin, it's not a four-letter word or anything, so it's appealing to a sufficient amount of people. It gained some early traction because you had some relevant people in the space promoting it. And then it received attention from the TradFi Twitter bubble because all of these boomers on there who were into this fixed income, retire early stuff or fundamental analysis, they were all getting outraged by Fartcoin trading at a billion market cap or a couple of 100 million. I don't know where exactly it was back then. And that made it funnier because Fartcoin, I think it's Fartcoin besides Bitcoin, is probably the second crypto investment I would start explaining to any normie friend that asks me if he or she should get into crypto. Fartcoin is the best resemblance of the reflexivity of this market. It only becomes funny if price goes up because haha, it's so stupid. Fartcoin, it's going up again. Haha, so funny, blah blah. But if it's going down, the people are pissed. Sentiment is down. It's not even funny anymore. It's like, yeah, it's so predictable. It's Fartcoin. It's so stupid. Of course, it's going down. So I think that encapsulates that quite well. But Fartcoin is already trading back at I think 1.3 billion. So for Fartcoin to hit X, that would make it propel it to 130 billion market cap. I'm not saying it's impossible, but I would say that it is very unlikely. You need these 100x stories to get retail really excited and to get new people into the industry.
Yeah. So I don't think you need that much, especially since if you look at a regular pump.fun launch, there's a billion token in the bonding curve. And when it bonds, I think roughly 70% are in the people that buy it through the bonding curve, and 30% used to migrate to the Radium pool, now are in the pump swap pool, something like that. If a coin establishes and doesn't rug, you're gonna see something like 500-600K market cap, maybe like a million market cap. 90% of the token will be held, and 10%, which is basically a 100 million token, will be in the pool at 1 million. Now, obviously, the liquidity landscape changes as the project matures. At some point, you will have Meteora pools, you will have maybe Kraken, Binance, Coinbase pools, but the liquidity in general is extremely thin, meaning it's so easy to create these paper value $1 billion market caps. It's not hard. You don't need hundreds of thousands of people doing what you described, selling their ETH BTC on Coinbase and buying this token. In fact, we always speak about these cabals. If a major exchange, is preparing to launch an asset, and they're maybe like working with the team or working with a market maker to slowly get the asset to a point, it's very easy. And then also, like, regarding the market making side, these teams or these projects make deals with market makers, and the market makers usually get a percentage of the supply, and they hold it for, let's say, 6 months, and then they get a retainer from the supply that was loaned to them. That's one way to do it. You can also just pay a fixed retainer service fee. But market makers' interest is to drive the price of these assets as high as possible, so their retainer is worth as much as possible, ideally millions. And market makers, they're the best people in the world to understand. A market maker could easily engineer a price of a token going consistently up without many resources. Long story short, I still think that it is a casino, and it is very easy to drive these valuations up. I think the biggest challenge, though, is the selection of the blue chip meme coins, as they say, right? Because we have so many, and I think most people will lose their money in random coins that are being launched or that are being shilled. But I think for the blue chips, I'm very, very bullish on the multiples, even from here.
I think in the description of the mechanism, we are very similar, but where I would beg to differ is that, I fully agree with liquidity being thin. It's in theory quite easy to pump these things up to $1 billion paper market cap. However, the big difference to the last cycle is that in the last cycle, you had more liquid capital available, and maybe 1,000 or 1/10,000th of the coins that are currently in circulation. So back then you had 100 newly launched coins, or maybe 1,000 newly launched meme coins, competing for 10 spots who briefly would go up to $1 billion. By now, you have 10,000 coins being launched every single day on pump.fun. So while the leg from, let's say, 100 million to $1 billion is still possible with the help of selective market makers, to put it into these words, to make the leg from 500K market cap to 100 million market cap, and staying at 100 million market cap for a couple of weeks, that has become much, much harder. And we have seen that if you're much more active on the on-chain meme coin front than I am. But whenever I look at Dex Screener, most of the things, they tend to stall around 30 to 70 million market cap. And they remain there maybe for 2 days, and then they start a slow bleed out back down to 10, and then they just drift into irrelevance. When you have a very few outliers, there only has been a single outlier in the last couple of months, which has been Housecoin, which has gained a sustained amount of traction, both price-wise but also attention-wise on crypto Twitter. That's been the only coin within the last couple of months. And hundreds of thousands of other coins that have launched, they are completely unable to gain any sustained traction because there's just too many coins for too little capital, and not only too little capital, but also too few players in the game who devote their attention to these things. Maybe to pivot back to the price targets before we talk about the exit strategies. What are your price targets for BTC, ETH, Sol, and maybe some select altcoins that you're interested in?
It's hard to give targets other than BTC, but I'm gonna put skin in the game and put out numbers. So BTC around 200K, give or take. ETH probably in the short term has a relatively high upside. Like I could see a 3x or something like that. So 6K, 7K, something like that. Anything else is hard to predict. I wouldn't be surprised seeing Solana at 4 or 500. I wouldn't be surprised seeing hype above $100. But and let's say, I wouldn't be surprised seeing Fartcoin approaching $10. These are things I wouldn't be surprised. I also wouldn't be surprised seeing Fartcoin hit $3 only, and then retrace back, and that was the Pico top. Like, these things are hard to predict. But I think most people who are selling the dream are shooting a little over the top. I have experienced these insane parabolas in the past. I just think that in this case, reasoning by analogy is the wrong strategy because the environment and the sheer amount of supply and token has changed. Otherwise, my targets would be way crazier. But coming back to the compression theory, like Bitcoin already is underperforming every consecutive cycle. And it makes sense, right? As it approaches the market cap of gold, we're not expecting like a 20 to 50x anymore per cycle. We're happy with like a 5 to 7x or something.
I think we are very aligned with the range of price targets. To spill my thoughts here, overall, the Bitcoin price targets have been pretty muted and sober this cycle so far from all the kind of few reputable accounts to follow. I've seen numbers range from K, but DK seems to be the upper bound. Personally, I think that 150K is a base case, could range between 140 to 150 or 160. 50K would surprise me quite a bit, at least in the current environment. If we see some obvious geopolitical catalysts, if we suddenly see all of these nation states trying to front run each other with Bitcoin strategic reserves, etc., then we could easily see decay. Anything above that is unlikely, and I would be quite surprised. Ethereum, if it doesn't break the 2021 all-time highs, that would be a disaster, especially for all the crypto native people who have participated in the on-chain economy over the past 4 to 5 years. Even though some of the newer class people have made most of their wealth in Sol and in the Solana ecosystem, the overarching amount of crypto native money, and you can verify that by just looking at the total value locked metrics across chains and ecosystems, still sitting in ETH. And if ETH doesn't break all-time highs, I mean, these people would, I mean, I'm most to the DeFi bubble and in all of these yield farmer servers, I mean, people would be so desperate and so depressed. So ETH, I think, maybe 6,900, 8,000 is kind of the upper bound. If it hits 10,000 or above, I'd be very surprised. That would sort of be my equivalent ETH target for BTC hitting 250K. For Solana, I think it's certainly $420 coded, maybe 690. And it may seem kind of stupid to punt these meme numbers like 6,900 for ETH or 420 for Solana. But if you look at the current prices, I think these are quite sensible multiples. Also, if you look back at last cycle, Bitcoin peaked at, okay, this entire industry is very attracted and all has a magnetism towards meme numbers. On the Fartcoin side, something between $5 to $10. I think Pepe maybe sees a little bit of a run up, even though I think that the OG internet crowd that got lured into crypto in 2021 was much more present back then than it is now. So I don't know if Pepe amongst the younger people who get into the industry is still such a popular meme. Maybe some Italian brain rot character or whatever gets tokenized and replaces Doge and Pepe and whatever. But I'm less opinionated on the meme side.
Yeah.
Hyperliquid, I agree. $100 would be cool. On the
Here's the thing.
things, I am quite clueless. I still hold quite a few of these, namely Pendle, Ethena, and Fluid. But
Yeah.
I would go more by, okay, where is other stuff standing right now? Are we hitting general euphoria? And I will also try to exit these at this moment in time rather than making isolated price targets for these assets.
So the price target almost doesn't matter because it's, I would say, for 99.99% of the people, impossible to hit, like, sell at those price targets. You either have to be extremely autistic and your prediction has to just be right this time, or you're going to round trip everything because your target isn't hit. Hence, the smartest thing to do is to just DCA out. The price target doesn't even matter. Look at the net inflows, look at the unrealized gains, look at the momentum, look at the euphoria, look at the greed signals. And if you see those very, very high, just DCA out. Don't even bother. And then the price target shouldn't matter. The reason I say this is you could be selling ETH at 3, 4K and then only for 2 days on the last leg of the Pico top, it hits 6,900. But, for a couple minutes maybe. If you've experienced these cycles, those numbers don't mean much because the all-time high price isn't sustainable, doesn't stay there for long. And if you're lucky enough to having had a good sense and being on your computer and having the assets liquid available and on-chain, there isn't any craziness or gas wars going on such that your orders actually fill and settle, kudos to you. Then that's great. But I think most people will, even if they sell the next day for 5K or if they sell the day before for 4,200, it's going to be fine. But I just think timing the exact peak is going to be so hard.
Of course, very few people will time the peak. That's what makes it the peak and what creates these euphoric reflexivities. But to neglect price targets and to solely rely on time, I think would be highly irresponsible. I know a guy who made his decisions this cycle solely based on time. He was super convinced that we would peak in mid-March of this year. He was mainly in ETH. He pretty much sold his entire stack. So
know who that is?
Bottom ticked ETH. And to just rely on time by these very rigid preconceptions, yes, we must peak at point in time X. From an investor's perspective, this is highly irresponsible. If you're doing it with private capital and you have the means and the knowledge and the edge to make money in stablecoins, it's all right. Maybe you don't like the delta exposure. But if you're the average retail participant who maybe enters this industry with 10,000 to 100,000 and wants to extract a couple of X's from the initial investment, to just rely on time, it doesn't make any sense, especially if it's your first or your second cycle. You always need to have a multitude of conditions that are hit in order for you to trigger an exit.
That's exactly what we said in the beginning, right? We have these assumptions for timeline, but we need to reassess those as we approach those months. Because if the numbers on chain look different, I think everyone should be open enough to reassessing those.
Would you mind sharing some of your cycle top conditions or indicators that you like to look at?
That's actually a product we're working on. Maybe let's tease a little bit. So we are gonna release a small product. I don't know how we're gonna call it yet, but something along the lines of like cycle predictor. And we're gonna take into account a couple different things. So we're gonna take into account traditional rainbow. We're gonna take into account post-halving 48 months. We're going to take into account net unrealized profit and loss Newpol. We're going to take into account SOPR. I'm gonna dive deeper into it at some point. But yeah, we're going to release the product probably next week. And it's going to have our prediction.
People can stay tuned for that. To finish, what do you think will there be a catalyst that marks the top on the either industry internal or macro side of things? We have established that we are very uncertain about what exactly will cause the run-up. But on the other hand, will there be something very decisive happening at the top? Maybe the start of a macro recession, industry internal event like the Luna blow up or FTX last cycle. Do you have any opinion on that?
I mean, I feel like if something like that happens, it must be along the lines of Michael Saylor and him actually selling Bitcoin with MicroStrategy. I don't know if you've seen, but he was against proof of reserves, proof of tokens. And some people hinted at, he probably sold some. So I feel like he could be the main character that, the infamous main character of this cycle. Whether it's on the legal charge side because of the scheme they've created to actually sell those services and purchase Bitcoin, or it's on the credibility side for actually selling Bitcoin behind the scenes and, shilling it on Twitter. On the meme coin side, I think we also have a few candidates. Well, Murad. I think if Murad sells his SPX, meme coin cycle is probably over.
Although rumors that he has sold his wallets OTC or something.
There were rumors. I don't think they're true. But they actually hint at the proper mechanism, right? Someone like him would not dump his tokens on the market. That just doesn't make sense. What he would do is he would go to Wintermute, he would sell his token at a 30-40% discount, and he would make the deal and just receive the cash in a separate wallet, hand over keys for his wallets. And by the time Wintermute accesses them, Wintermute can hedge against it accordingly. So for them, it's delta neutral, or they make a small profit out of it. And Murad can exit at a discount. So that's how it logistically would run. I don't think you will ever see an SPX token of Murad being sold by Murad on CowSwap or Uniswap or any other DEX.
So you think it's going to be driven by the big actors of the industry this time? Do you have any outlook
Every
on
time.
macro leading up to maybe Q4 this year or Q1 26?
I'm not too informed on that. I can only repeat what I've been consuming myself and the resources that I've been reading. And it's mainly the main sentiment is Warren Buffett has been in cash for a while. Other actors, Burry from The Big Short, also very bearish on 2026.
Well, I mean, Burry has been bearish a number of times the last couple of years.
And he was wrong.
Unfortunately, yeah, most times he's been very wrong with
but I think, you're wrong until you aren't. So I think just because someone has been wrong with a thesis that made sense at a time, the misconception we have is we judge, or like most people judge others based on outcome, which is a logical thing to do. However, they don't judge you based on your methodology pre-outcome. But if you look at his methodology, I think it makes sense. Like everything he's been saying to me makes sense. Timing wise, he's wrong. Maybe he's not powerful enough, or there's other forces, or maybe he's just wrong. But to me, it makes sense that we need a proper correction, not just in crypto. And I feel like towards the end of the year is probably too late already. Going cash towards the end of summer is something I would personally do. I am personally going to do.
Largely agree. We have needed a proper correction and a cleanse of economic garbage ever since the global financial crisis. But ever since that point in time, we have only made it worse, or government, central banks, and commercial banks have only made it worse. Not necessarily with malicious intent, but if the incentives prevail, show me the incentive, I'll show you the outcome. I would fully agree that macro is severely screwed. You have insane incentive misalignments, and we have had these misalignments and distortions for the last couple of years. As we have discussed in one of our early episodes, COVID and this sudden stop to global trade and to free trade has exposed a lot of these vulnerabilities and complexities that we have blissfully ignored over the last 2 to 3 decades. But we cannot deny these things anymore. Looking at how macro is trading right now, it seems like we are on the path of trying to ignore these things again. And while macro, sentiment-wise, has been screwed for the last 3 years, 4 years, 5 years maybe, the numbers that the big players use to inform themselves and to make decisions based upon, they're not looking bad. If you look at job reports, inflation is coming down, etc., GDP growth, it's not looking like there's something severely going wrong. You have to dig quite deep, and you have to look at some more hidden metrics that are the result of these stacked complexities to find stuff that is warranting you to be worried. If you talk to consumers, all the essential goods are getting more expensive. There's no sign of short-term consumerism stopping. If you just look at large cities in the US or even here in Germany, as we've alluded to last time, the economy is not real. Everybody is having a fake job if they're working in any white collar industry. If you look at the consultants, if you look at many of the finance functions, if you look at many of the industry or company internal functions like HR, administrative roles, they are necessary within that isolated environment, but they do not create anything in the grand scheme of things. Then you could argue, well, if that company is creating something useful, then there is a need for these jobs because they need to keep the company running. But then you look at the products of the company, and I mean, just look around Berlin. Everybody is building some stupid software as a service thing, and there's an infinite circle jerk of different software as a service companies that are solving the problem that the prior one has created. So if we saw actual economic Darwinism, we would enter the deepest recession planet Earth has ever seen, because not necessarily it would bring us back to existential threats like us not being able to afford food anymore, but the severity, and because global trade has become so intertwined and the economy has taken up such a huge role over the last couple of decades. But again, if you look at the data that is propagated to be relevant, you cannot see a clear sign of stopping. And I personally struggle, even though I'm not a macro expert by any means, to take any directionally strong opinion on macro right now. And I have struggled doing so over the last couple of months because there are so many indicators out there by now. And there are so many interconnections between different metrics. Regardless which case you want to argue for, you can cherry pick whatever indicators you want, and you'll be able to build a compelling case for either side that either everything is fine or that everything is fucked. The majority of consumers, the lower middle class to middle class in first world nations, they all feel like they're screwed, and they have felt that way over the last couple of years. On the other hand, if you look at many businesses, also smaller businesses, unless they have been very dependent on, for example, energy costs in Germany or some of these real world factors, many of them have been doing pretty well. They have had their best years in 23 and 24. So again, no sign of slowing down, no sign of collapse. And on the consumer side, all these essential goods have not become cheaper or even have become more expensive. On the other hand, we need to consider that the baseline expectations of consumerism have also shifted. So everybody is not satisfied by just having a nice apartment, some food, and a gym membership. Everybody always needs the latest iPhone, the latest MacBook, etc. And all this short-termism is compounding. The expectations are increasing continuously. And then lastly, all of these developments sort of accumulate in the economy and the behavior of economic actors becoming more and more emotional. I think the just observing the economy as someone in his early 20s over the last couple of years, to me, it is devoid of any logic and any rationale. We as a species have always played stupid games to win stupid prizes. And the prizes in the competition of social status, they are the same as they have been a couple of decades or even a couple of centuries ago. However, the games we are playing have become so much more stupid. It all feels so utterly retarded. And that has fueled a lot of the economic absurdism that we have hinted on in the last couple of episodes that particularly my generation is propagating or at least behaving that way. And I don't see how that stops. And again, like, yeah, it's a very confusing time to put that as an end note. I don't know how to position macro buys, regardless if it's a 6 month or a 12 months outlook. In the long term, meaning a decade plus, I'm generally very optimistic. I do think that we'll be able to fix a lot of things, or at least cope with a lot of things, that they don't develop into existential threats. I'm generally optimistic that AI will be able to unlock a ton of economic opportunity, but the inner workings and the inner mechanisms of macro, they have been out of balance for such a long time and to such an extent. I genuinely doubt that we can fix that system from within without some sort of severe multi-year recession or crash. But again, like, I don't know what would trigger it.
That's awesome. I'll leave that as a little bit food for thought for the end. If people are curious, we have a Telegram join our Telegram. We'll be super keen to discuss more with other people, or we can have a discussion on Twitter. But I think with that, we can probably wrap this one up.
Was great talking, and yeah, see you next week, the latest.
See you, Max. Ciao.